This video I'm going over 5 top growth ETFs to invest in 2022 with huge long-term potential. For anyone that does not know, an ETF stands for Exchange Traded Funds. Exactly as the name says it, there are funds that trade on exchanges, generally tracking a specific index. So mainly a basket of stocks. When it comes to investing, many believe it is the best and easiest way to invest, to mainly pick up ETFs to build long-term wealth, as they are considered low-risk investments that offer portfolio diversification. Even though growth ETFs might be a little more risky investment because of the sector and companies that they are in, they are still way safer and a lower risk and mainly passive than investing in individual stocks. But hey, I get it. I love investing in individual stocks, doing research, and the adrenaline it brings, but sometimes people don't have the time or simply prefer to invest in ETFs and forget about it without needing to read 10 different quarterly reports on earnings seasons from the 10 different companies that they invest in, which is why sometimes it is better, easier, and less risky to invest in ETFs. An ETF most likely will not go up 100% in a year, like it happened with different companies like Tesla. But growth ETFs tend to have a nice return, 20%, which in my opinion is an excellent return and more than fine to build wealth in the long term. Now, the first ETF I want to talk about in this video is called Schwab US Large Cap Growth ETF, ticker symbol SCHG, which, as the name implies, it tracks the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. This ETF includes companies that are big but are still expecting to have a high growth year over year. We can see that their top 10 holdings are basically companies like Apple, Microsoft, Amazon, Tesla, Google, Nvidia, Meta Platforms, United Health Group, Visa, and more. Which, as you can see, they invest in different sectors, but 48% of it is in technology, and then we have communication services, consumer discretionary, healthcare, and more. It is currently trading at $66.11 at the moment, with a total net asset of $17.81 billion. It has a yield of 0.43% and an expense ratio of 0.04%, with a 52 weeks low of $63 and a 52 weeks high of $84. A lot of volatility, as we see, but we can see that it has been a little volatile, as it went up 27% during 2021, but it is down 8.88% this year. Even though, as we can see, it has been recovering as well in the past week. Still, it has had a return of 34.34% on average in the past 3 years and 19.87% in the past 10 years. ETF number 2 in this list is called iShares Russell Mid Cap Growth ETF, ticker symbol IWP. I do have to say that there are ETFs for both large and small caps as well, but this one mainly focuses on mid-cap stocks from the Russell, which, remember, a mid-cap stock is a company with a market cap of between $2 to $10 billion. The Russell itself tends to have more risky investments, but mid-caps tend to be less risky than small caps. This one holds 389 companies in total, but its top 10 are companies like Chipotle, Lululemon, Dexcom, Datadog, and more. As we can see, it focuses more in the information technology sector, but it also includes the healthcare sector, industrials, consumer discretionary, and more. It includes sectors that many of us might not have any kind of exposure to it, so it might be good to analyze it. It is currently trading at $102.47 with a net asset of $16.24 billion and a yield of 0.26% and an expense ratio of 0.24%. Obviously, its last year has not been the best performer, but it saw a return of 12.50%. Still, on the 3-year period, it has had a return, an average of 27.18%, and in a 10-year period, an average return of 16.39%. ETF number 3 in this list is a well-known ETF called Invesco QQQ ETF, which mainly tracks the Nasdaq ETF, but mainly companies that are innovating or focus on future trends. Are companies that focus to be the leaders on trends like electric vehicle, cloud computing, the metaverse, or augmented reality, and more, which is, in my opinion, a more risky investment as there are a lot of uncertainties on those sectors, but with huge long-term potentials. It is currently trading at $368.06 per share with a net asset of $215 billion. It has a yield of 0.46% and an expense ratio of 0.2%. Its top 10 holdings represent 53% of its holdings, and are companies well known such as Apple, Microsoft, Nvidia, Tesla, Costco, and more. As we see, it focuses more on information technology, communication services, and more, because this focus on companies in the technology sector that are looking to be the leaders or are already the leaders of long-term trends. We should expect a nice growth, but also volatility by investing in it. Obviously, not like investing in individual stocks, but still. ETF number 4 in this list is a well-known ETF and in the growth sector, and it's called Vanguard Growth Index Fund ETF with the ticker symbol VUG. Tracks the performance of the CRSP US Large Cap Growth Index, a total of 265 companies or stocks that mainly focus on technology as well, and then consumer discretionary, meaning that its top 10 holdings are mainly companies like Apple, Microsoft, Alphabet, Amazon, Tesla, Visa, Home Depot, and more. It is currently trading at $294 per share at this moment with net asset of $165 billion. It has a yield of 0.57% and an expense ratio of 0.04%. Here in this graph, we can see the past 5 years. As we can see, it has an average annual return of, in the past 10 years, of 19%, in the past 3 years of 34%, and in the past year, 27.30%, which, if you ask me, it is an excellent return from an ETF. It is also a high upside of potential, which holds large and kind of stable companies with a low cost and nice long-term investments. ETF number 5 in this list is the S&P 500 Growth ETF with a ticker symbol SPYG, which is just the S&P 500 or the SPY focus on growth, as it offers exposure to S&P 500 companies that display the strongest growth characteristics, which are companies like Tesla, Home Depot, Apple, Google, Nvidia, and more, giving us exposure to different sectors. It is currently trading at $67 with net assets of $16.32 billion, a yield of 0.72%, and an expense ratio of 0.04%, with a 52 weeks low of $55 and a 52 weeks high of $73.64, with a 3-year average annual return of almost 22% and a 10-year average annual return of almost 17%. It is more of a kind of a growth or mini S&P 500 ETF that gives you exposure to many sectors. Now, there are ETFs for many different sectors. You could see that most of these growth ETFs I mentioned, or all of them, focus mainly on technology. Same with many other growth ETFs that we can see in many videos or articles on the internet, as technology is the sector that is growing the fastest right now and with a lot of long-term potential. I have to say that a company without technology, or a company that decides not to innovate to keep up with technology and trends within it, will be obsolete. I do have to say that I invest in only 3 ETFs on my M1 Finance portfolio, which is just a small portfolio that I created with you guys months ago to do an experiment in this channel. And those are the VOO, which is mainly S&P 500, and the VGT, which is the Vanguard Information Technology ETF fund, which have had a nice average return in the past 10 years, and even more in the past 3 years, as it focuses, as its name says it, in different sectors within the technology sector. As you can see, mainly the technology, hardware, storage, and peripheral, and then system software, semiconductors, application softwares, and more. And mainly their top 10 holdings are companies like Apple, Microsoft, Nvidia, Visa, Salesforce, MasterCard, Cisco, Adobe, and more, which you guys know that I've been trying to invest in semiconductors and Adobe, which are companies that I've been wanting to, but I have not yet. And still, this ETF gives me kind of an exposure to them. And then another ETF that I invest is the VTI, but the performance is quite similar to the VOO, as it is the Vanguard Total Stock Market Index Fund. Now, historically speaking, investing in ETF is the easiest and safest way to invest. You might get a better return with individual stocks if you have the time to do research on those companies and all that. If not, then investing in ETFs might be the best way to invest for you. I really hope you enjoyed this video and that it was helpful to many of you. I will leave you here a video of my top 10 performers and here for you to subscribe. Thank you and see you next time.